a very reasonable and very calculated and cautious commentary coming in from Governor Das, and in the true cricket season flavor, summed it up brilliantly, saying that we are at a tricky pitch and we have to play our shots very carefully and accordingly. Moving pitch, that's what he called it for. We have all our panelists on the show joining us. Gandhi, former RBI Deputy Governor, Nilesh Shah of Kotak AMC, and Abheek, of course, is with us. And of course, we also have Ashwini Tewari of SBI joining us. Mr. Tewari, thank you very much. All of you, thank you very much for joining us. And Mr. Tewari, congratulations on your extension as well. Good news for you. So let me start by getting your reaction. How do you read today's commentary? I mean, rate, of course, there was a consensus, nothing would be done over there. But, you know, higher for longer is coming back home, finding very clear mention in Dr. Das's commentary. But at the same time, pretty confident on growth and high likelihood of prices coming down September onwards.
Yeah, so the policy was largely on expected lines. As you mentioned, the rate hike wasn't anticipated, nor was anticipated in line with the the inflation being high. But he made it clear that inflation looks like a transitory phenomenon, especially since the vegetable prices have started coming down and the core inflation continues to come down. So in that sense, the policy is a continuation of previous statements, and the growth projection continues to be strong. And as far as we are concerned, we see the growth happening on the ground in terms of the sanctions which are happening, in terms of the disbursements which are happening, the new projects which are coming up. So that is borne out by numbers, and year on year, the credit growth continues to be strong. So all of these factors, I think the overall picture looks good. The caveats, of course, remain one, the external situation, where still as the governor very eloquently mentioned about geopolitical risk, the fragmentation of geo-economic, which is every country trying to do everything itself, and therefore the trade coming down. And of course, the other thing was about the financial tightening in various Western markets, which shows no signs of coming down in the near future. So these are the three risks from the external sector, which is the major risk for us. Other than that, in the country, we continue to do well. The growth continues to be strong. Inflation will hopefully be under control. So overall, it's a good policy and a continuity which gives stability to the markets overall and to us as well.
Would you like to add to what Mr. Tewari is saying? What to your mind stood out from the commentary?
Sorry, is it addressed to me?
Yes, Abheek, to you.
Yes, well, clearly, I think the markets were waiting for clarity on the liquidity stance of the RBI, and I think it sort of clearly revealed its hand in the sense that it prefers, reasonably tight liquidity conditions, and the temporary measure will perhaps now be replaced by a more permanent system of intervention to remove durable liquidity through reverse open market operations, as the market calls it, OMO sales, which is bond sales. So you've seen the 10-year bond yield go up. So in that sense, it's kind of, I would say that it's still kind of hawkish and goes hand in hand with the repeated emphasis that the 4% number is the target and not not the upper end of the band, which technically the RBI is allowed. So higher for longer. And of course, I think you must recognize the fact that the policy statement began with a quote from the Arthashastra on financial stability. And it emphasized that inflation is very much a key component of financial stability, but there are issues other than inflation that need to be addressed given the global scenario and so forth. So I think the RBI is now signaling that it's also kind of vigilant on the external environment and the impact on macro stability, and could use monetary policy instruments to counter some of the pressures that might emerge. So I thought, as he mentioned, that it is, although it appears status quo, there are nuances and complexities within the policy that I think the market would do well to sort of understand and internalize.
He did mention very clearly that it appears status quo, but there are few pointers which he wanted to bring it upfront for everybody who's listening to his speech. Nilesh is also joining us. Nilesh, you are a avid cricket watcher. It is a turning pitch, which RBI Governor is attempting to score well at. Will he be successful?
Well, RBI Governor as of today is like legendary all-rounder Kapil Dev. Kapil Dev could ball, bat, field and also be a captain. The RBI is also playing multiple targets. While inflation of 4% is Arjun's eye, they are also taking care of rupee, financial sector stability, liquidity in banking system, and most importantly, growth prospects of India. As long as Kapil Dev was there, we were sure we could win the game. As long as RBI is there, we could be sure that they will manage everything appropriately. So this is truly a reassuring policy to the market that we will manage no matter which ball comes to us and we will play it on merit.
Dr. Gandhi, who would understand RBI's job better than you would? Really negotiating the global macros, the rising yields. Many of us don't remember 15 years back the US yields rose to those levels. What would be the cascading effect of that on global asset prices and also financial markets? How are you looking at those risks which continuously in every part of the speech we saw Dr. Das allude to?
Yeah, that's correct. Because earlier we used to be very, very touchy and highly reactive to what is happening in the Western world, in the Western central banks, the actions, policy actions, and the Western market conditions. Today, touchwood, we have regained strength in terms of our own domestic internal, based on domestic and internal factors, that our systems of a financial system is a little more robust now. It is not as if everything, whatever is happening, automatically it is getting impacting and we need to be taking action. Rather, we have got inner strength now to withstand and wither the negative impacts of policy actions by the Western central banks or the financial condition happening there. So that is a primary message that I'm getting through this policy statement, that it is an endorsement that we have our inner strength. Yes, we will still be cognizant of what is happening there. The balanced approach towards when you mentioned that the inflation risks are highly balanced because of the oil prices and what is happening in the geopolitical situation and also the financial condition in the world. We'll be watchful, but the strength, as I mentioned, is now more in favor of India.
Mr. Tewari, while the governor is pretty confident that it's a turning pitch and they'll play their shots accordingly, but the pitch has various unknowns. I mean, A, the geopolitical situation right now, the backdrop that the governor highlighted. B, of course, you don't know which way the US yields are going to go. Post the recent retreat, we don't know whether they're going to once again escalate back or not. You think the governor will keep what the Fed does and their stance as one of the key indicators?
Is that question addressed to me?
Yes, Mr. Tewari, to you.
Okay, so the RBI has, while they obviously watch the Fed rates because it has a major impact on the overall US dollar rates, which is a key determinant for us. But as we have seen in the past also, when the US was increasing aggressively, the RBI did not follow immediately. It has not been following. So in that sense, it's not totally copying what the Fed is doing. They are taking their own independent stance. And even now also, when the pause did come and pause has stayed, they've not gone by what exactly the Fed is doing. That's one of the parameters, which is, I think, part of the overall book. And as a result, I think our policy has been far more stable and far more cautious than compared to the Fed, because the Fed for almost a year kept on saying it is transitory, and then when they've realized it is not coming under control, they suddenly increased and ramped up in a big way. So the working of the interest rates for the system is something the RBI is very cognizant of, which is mentioned today as well. So I think in that sense, this is just one parameter, not the only determinant.
In fact, Mr. Jayesh Mehta is also joining us from Bank of America, MD, India Country Treasurer as well. Welcome to the panel, Mr. Mehta. I'll come to you in a minute. Abheek, this entire issue of rural recovery, it has been eluding us for a long time now. The stock market goes ahead of itself and actually starts betting on such stocks, but it doesn't really come by, hasn't come by in a very meaningful manner so far. Today, Governor Das did mention of it once again. What are your thoughts on that part of our economy?
No, I think what he mentioned was that there is an incipient rural recovery which wasn't there earlier, and it is heartening to see that the rural sector is sort of slowly coming back into play. And but the problem is, of course, what will happen to the agricultural economy because of the uneven monsoons and so forth. I think things look a little better than what they did last month because rains have picked up and so forth. But I think you have to look at it on a sort of granular, disaggregated basis. He mentioned a number of crops which are going to be affected, particularly pulses. So geographies that are related to these pulses, large producers of these commodities, they might see on the net, average aggregate demand slipping because of poor performance, and other pockets which would continue to retain the momentum. I think the rural sector picked up. I would think, also given the various anecdotes and little bits of data that I pick up from banks, that things are kind of flattening out. So they're not going down, but they're kind of flattening out after the recovery.
Nilesh, what should be the reading for the equity markets?
I think for equity market, this policy is as per expectation. And anyway, equity markets have many other things to worry about. The result season is about to begin, and the uneven recovery is something which markets will be looking forward to. Premium brands have done well, but bottom half of the pyramid, especially with uneven monsoon, could get impacted. There are also worries related to energy prices, oil moving into triple digit thanks to cartelization by OPEC and non-OPEC countries. And finally, people will start discounting what will happen towards election 24. So for equity market, this ball has come as per expectation, no googly, no turn. But there are many other balls which they don't know how it will play out.
Well said. Jayesh, how are you analyzing the liquidity situation? ICR are gone now. We're also heading into a festive season where demand for cash in circulation goes up. What is your assessment?
So we do expect that liquidity will come back. Of course, with festivities, some liquidity will go. They are very clear that they will keep it on a deficit side for the time being. Maybe they may want to see the next inflation print as going as per their trajectory and stuff like that. But for the time being, they would like the overnight rates to be more towards MSS rather than the repo rate. And it looks very clear. So markets, even before the policy, has expected that and that to continue. In fact, people were expecting some words, all kind of stuff, including a CRR hike, more VRRR and stuff like that. But I don't think they haven't done anything there. The only surprise, or maybe that I'm not surprised, but the market is surprised, is like the OMO sales and reiteration of 4% target. Maybe with the way, as Nilesh Bhai said, the global, there are many balls, many things they have to face global. There are so much of uncertainty. Now, you don't want to come out with status quo policy. You need to be a little bit hawkish. And how do you become hawkish without changing anything else? And that's where I would put this statement as more of a cautionary statement rather than they expecting any action very soon or very quickly. So I don't think they will really, but of course, market has reacted. There will be an OMO sale, there's an extra supply. And there, of course, you don't know every night what happens to the US yields, right? So that's the reason market has kind of reacted, right? There is no upside immediately, and therefore, why keep position?
Jayesh, quick follow-up. The rising yields and even dollar index may have retreated a bit from 107 onward, but still is quite elevated, and it is making financial markets nervous all over the world. How alarming is the situation as per you?
So of course, market is alarmed. Market is looking at US-India differential, and of course, equity market it will be different situation from a flows perspective. We have next year index inclusion flows expected to come. We see there is no much risk on the inflation, and maybe to put it lightly, I say in 2005 to 7, we had a spread of US and India at 58 basis points. We are still 250 basis points. So why are we so over worried about the interest rate differential between US and India, especially when our inflation is much lower? But markets being markets, they will want to, look at all the possibility. But at least from the policy side, I don't really expect any change even for the next policy, unless, something globally very murky happens. Maybe oil goes to maybe 120 or something plus and stays there. But otherwise, I don't really expect much changes.
Okay. Hopefully it's a status quo. We're as well hoping for the same. But gentlemen, great to have all of you on the show today and analyze the governor's commentary. We'll let you guys go on that note. By the way, a quick check on the equity markets, which are now sitting at the day's highs, 19,678 on the Nifty futures, and that's a solid over 100-point move that you've seen. And mind you, we started off just about very marginally, marginally in the green. About 0.2% was the kind of gain that we were looking at. Now, of course, there's Bajaj Finance, SBI, Bajaj Finserv, HDFC Life, Adani Ports, Dr. Reddy's, which are currently leading the way on the index. And Interglobe Aviation for a second consecutive day solidly up in the green for this particular stock.
In fact, given the hawkishness of the commentary, one would say that this is a very interesting and pretty mature reaction of the market at day's high as we wind up the show.